Good morning, everybody. Pope Binary here, and today I want to cover perhaps one of the strongest reversal strategies. It is the pin candle reversal strategy. And this strategy, it's been out there forever, but a lot of people, they ask me why it's not consistent, and it's because they don't wait for the right opportunities. So today I'm going to define what a pin candle is. I'm going to give you the best opportunities to use this strategy, and then I'm going to tell you what to look for and how to use it in your own trading. So before we jump in, here's the quote of the day. It does not feel like work except when you lose. Then it feels like work. That's from Bruce Kovner. So without further ado, here's the pin reversal strategy. Hey everybody, so let's jump into this pin reversal strategy. This is something that I really, a lot of people, they know what pin candles are, but they don't know what true, real pin candles are. And so a lot of people just lose a lot of money on pin candles. And I'll explain that to you at the end of this video, why a lot of people lose money. But first, I'm just going to define a pin candle, give you my advanced checklist that I look for when I look for pin candles, and then I'm going to show you a bunch of examples and then how to apply it to your own trading. So let's define a pin candle first. A pin candle is simply a candle in which the open and close are in extreme proximity, meaning the open and close are very close together. A large wick forms in the current direction of the trend. There's these things called hammers, and I think they're called shooting stars or something. I don't really know what they're called, but essentially it has to form. The wick has to form in the current direction of the trend, and the wick has to be at least 3 times the length of the body. So if we look at this, these are just very basic, clear-cut examples. As we can see, this is the bullish pin candle. A lot of people call these tombstone candles. If you're familiar with that, a tombstone candle, you can call it a tombstone candle, and then this is an inverted hammer. These are just other words for the pin candle, but essentially you just see the open and close are very close together, followed by a strong rejection wick. And for the sake of teaching, I'm going to show you these 2 examples, but in the next slide I'm going to explain why these are actually bad examples. But for the sake of teaching, if you saw a bullish run followed by a bullish pin candle, you could expect the market could reverse. And then if you saw a bearish run followed by a bearish pin candle, you could expect the market to have a pullback or reverse as well. And something I just thought of, I'm not going to take too long on this, but the reason they called it a tombstone candle, right? These are pin candles, but a lot of people call them tombstone candles, was because back in the day, there's something where like you couldn't close positions or whatever, but basically if people saw that a pin candle formed atop a bullish run, that means that a short term the bears were about to step in, so they called it a tombstone candle because their profits would be buried or something. So I always thought that's kind of neat why people call them tombstone candles, but for me I refer to them as pin candles. So this is the specific checklist that I can give y'all to hopefully improve your odds of winning pin candles, because if you see these that's a little spoiler alert, but if you see these candles all the time, you see pin candles form all the time, but how to actually improve your odds of winning. So the pin candle needs to be the opposite color of the current trend. So in this example, you can see bullish run, red candle; bearish run, green candle. The bigger the wick, the better, because that just means there's a stronger rejection in the market, and then the market is most likely going to have a pullback or reversal before it'll continue in the current trend. You need to wait for the pin candle to form at key support and resistance levels, because that is huge, because especially on any reversal strategy, anybody will tell you if you play reversal strategies, waiting for it to form at a support and resistance level just improves your odds of winning, because that just means the market is at a value it doesn't want to break, and that's huge for reversal strategies. If you don't know what that is, feel free to check out this link, and I'll help you identify support and resistance levels. So the bigger the move before the pin candle, the better, because that just means the market has been overbought and oversold. And specifically in this example, the bigger the candle is actually before the pin candle, that's even better, because the bigger and the bloodier the move before the pin candle forms, that just signifies that the market is extremely overbought or extremely oversold. It's hard to see this on just this basic picture I have for y'all, but when the markets are forming, if you see a huge jump, you're afraid to bet down. But I beg to differ. If you see a pin candle form after a huge jump, that is a super, super strong signal that the market's about to reverse. And then the fifth, the last thing you need to know is you should really not have to make excuses for whether it's a pin candle or not. The pin candle, when you're looking at a chart, it just needs to be glaring and it needs to be sticking out to you. It needs to be so big that you don't have to think about whether it's a pin candle or not. And I mentioned at the beginning of the video, a lot of people lose trades when they enter on pin candles. And the reason why is because they enter on small pin candles. And I mean, these are like, little pin candles that form in the trend. That's nothing. You cannot rely on that in the least. You have to wait for a huge pin candle to form. So that, like I said, this is the dream setup. If I ever see this setup on a chart, I will enter it 100% of the time. So now what I'm going to do is I'm going to jump into some examples for y'all. And these are very straightforward. I guarantee if you go look at your charts and look at the guidelines that I've provided, you'll be able to find dozens of examples. But here are just some examples for y'all. There was a bearish run followed by a clear-cut bullish pin candle. And one thing I want to highlight, I haven't really mentioned this, but when we look at a pin candle, notice how there's no real wick on the opposite side of the pin candle. That is huge. If there's a wick on the opposite, for example, on this green pin candle, if there was a wick on the bearish side of this green pin candle, that would be a much stronger pin candle, because what that means is that the market pushed higher, got rejected, it pushed lower, and then got rejected again and bounced back up. Okay, that is an extremely strong signal. So if you ever see a shadow on a pin candle, just be cautious because they're not all that reliable. But for example, this next example, the reason I just told you all that is here's another example. See how there had been a bullish wick form on top of this pin candle? The reason why I would actually still enter this trade is because the upper wick compared to the lower wick is so small that it doesn't matter, right? If you combine the body with the body of the candle with the size of the upper wick, the length of the lower wick is still 3 times the width, or the 3 times the length of the overall candle. So that's just something huge. Just watch out for shadows on top of pin candles, because if the shadow is too large in the wrong direction, then don't enter on it. It's a bad trade. And so next thing I want to, here's a bearish equivalent, right? And the reason I selected this example is because notice how it is glaringly big. It just sticks out like a sore thumb on this chart. And the other thing is, if we can see here, it touched a support and resistance line and got rejected. And the last little thing I want to highlight is notice how the market got it was a pullback, not a reversal. A pin candle doesn't necessarily mean that the market is reversing. It just means that there's going to be a pullback. See how after this pin candle, the market went back to being bullish. So that's just something you can watch out for. And then this last example for y'all, I just want to, there are 2 clear-cut examples here. We can see bearish run followed by a large wick, followed by, this was actually a reversal pin candle, and likewise this was a pullback candle. And so this is, those are the specific pin candles that I look for when I'm trading. There was one late last night at about 8 o'clock, and I made roughly $50 on an out of the money contract, and so that was good. And just look for this in your own chart. Like I said, go to your charts right now and look for these pin candles to form. Like I said, you can easily expect an above 70% win rate if you use the advanced specific checklist that I look for pin candles. So if you found anything helpful or found anything that you enjoyed in this video, please like, comment, and subscribe. My channel is devoted to binary options trading, so if you're into that, definitely go check it out. But if you're just into other types of trading, I've got tons of examples and guides for y'all. Feel free to go check out the channel, and I hope y'all enjoy. So this is Pope Binary with another video, and catch y'all on the next one.